Welcome back to The Explainer. Today, we're diving into Seagate's fiscal second quarter 2026 earnings call. And let me tell you, this report, which dropped on January 27th, didn't just impress, it absolutely lit up the market. Seagate didn't just meet expectations, they delivered a huge statement quarter. And we're going to break down exactly what that means. All right, let's start with the bottom line. Non-GAAP earnings per share came in at $3.11. Now, that's a full 15 cents above what the analysts were forecasting, a really solid beat by any measure. And, the top-line story was just as strong. Revenue hit $2.83 billion, smashing estimates by a pretty significant $60 million. Now, this is exactly the kind of outperformance that really makes investors sit up and take notice. And the market's reaction? It was immediate and it was powerful. Investors sent the stock soaring, up almost 10% in after-hours trading. That is a loud and clear vote of confidence in where this company is headed. So the big question is, what exactly was driving this record-breaking performance? Let's get under the hood and look at the actual metrics that powered this beat. Okay, now what's really fascinating here is the sheer quality of these numbers. I mean, just look at the non-GAAP margins. The 42.2% gross margin and the 31.9% operating margin, both of those are company records. And that $607 million in free cash flow, that's an 8-year high. This isn't just growth, folks. This is a company firing on all cylinders. Management pretty much said this was a perfect storm. Right at the center of it all was this intense AI-fueled demand from data centers. That demand allowed them to be really disciplined with their pricing and strategically shift their sales mix over to their highest capacity, most profitable products. And all the while, they were cleaning up the balance sheet, retiring $500 million in debt. Just fantastic execution. So let's pivot to what I think is the central theme of this entire story, this intersection of explosive AI demand and Seagate's unique technological edge. At the very heart of Seagate's advantage is this tech called HAMR. That stands for Heat-Assisted Magnetic Recording. Now, this is their key innovation. To put it simply, it uses a tiny little laser to heat the disk platter, which lets them write data much more densely. This is the breakthrough that unlocks the massive drive capacities you need for the AI era. And this quote from CEO Dave Mosley just brilliantly illustrates the supply crunch they're seeing. He said flat out that their most critical capacity, those high-density drives that data centers are desperate for, is completely sold out through the end of calendar year 2026. I mean, wow, that's an incredible statement on demand and their pricing power. And that level of visibility, the pricing power it gives them, it translates directly into future earnings. The company is now guiding for a powerful $3.40 in non-GAAP EPS for next quarter, which tells you this momentum is far from over. So, how did the market digest this overwhelmingly positive report in real time? Let's actually visualize that investor response. Well, investors reacted decisively. They bid the stock up by over $36 per share in the after-hours session alone. Now, this wasn't just a small bump. This was a significant re-rating of the company's value, basically overnight. And it wasn't just the price action. Trading volume surged to nearly double its recent average. So this wasn't just a few traders pushing the stock around. This was a massive influx of investor interest and deep conviction in the Seagate story. So this all brings us to the next call, our forward-looking analysis and our official rating on the stock based on everything we've just gone over. Our thesis is really built on 3 pillars. First, with the ongoing supply constraints and that incredible pricing power, we are predicting another beat and raise quarter. Second, we believe the stock's momentum is going to continue as the market fully digests this multi-year demand story. And third, all of this leads directly to our official rating. We are rating Seagate an outperform. We believe this company is in a uniquely powerful position to not just participate in, but to be a primary beneficiary of this AI-driven storage supercycle. Seagate's incredible performance leaves us with a really compelling question for the market. What happens when a so-called legacy tech company becomes the key bottleneck and the primary beneficiary of the next huge wave of innovation? It's a fundamental challenge to how we value these established companies that suddenly find themselves at the center of a whole new technological revolution. And, as always, please remember this is not financial advice.